What is going on, investors? Hopefully you guys are having a great weekend out there. That's right. It is time for the weekend stock show. Hopefully you guys are having a great weekend. On today's show, you can see on the ticker that's right above me, kind of the topic rundown that we'll do here on this show. We're going to talk about the SPY and the QQQ. We'll talk about earnings coming up. There's not a lot of earnings left on the earnings calendar. So what I'm also going to give you is a preview about a month ahead. We have earnings season kicking back off. So I'll give you kind of a preview heading into July, the companies that will be first to report then. Then we got the economic calendar. Big week in terms of economic data. We've got an FOMC meeting next week as well. I think the market's really anticipating that. We'll talk about that as well. We'll talk about inflation. Okay, that's been on the tips of everybody's tongues. You can look at gas prices. You can look at home prices. You can look at used cars prices, lumber prices, copper prices, gold prices, every price. Seems like it's going up and everybody's talking about inflation. In fact, it reminds me a lot in 2010, right after the financial crisis, we saw a big injection of liquidity from the federal government, spending lots of money, Federal Reserve printing lots of money. And there was a lot of talk about inflation that honestly never came. And so I'm going to show you some data points that have come out over the last week that might show we are in a repeat of that. I know Jerome Powell will probably come up later next week at the FOMC meeting. We have other economists out there that are saying that this inflationary time that we're seeing right now, it is temporary. It's supply chain, it's virus related, but it will go away. So I'll show you some data points that maybe support that. We'll talk about that. And then obviously we got to talk about crypto, Bitcoin, Ethereum, Dogecoin. We've got to talk about that. There are some trade setups for that as well. And we've also got some meme stocks. We've got to talk about meme stocks, baby. They've been on fire. I'll show you a couple of those that I think are setting up for trade ideas as well. So back half of the show could be if you want to have some trades heading into next week. Now, let's kick things off with the major averages. This is the SPY. This is the S&P 500, basically a proxy for it through an ETF, SPY. Sophisticated technical analysis on here, I know. So we're in an uptrend, okay? And let me zoom in here kind of closer to where we are. We popped up above here. I think SPY made an all-time high, just tipped its head over these highs here, right in that 424 range, at least on this ETF. So next week's kind of a critical week. Do we pop up above this? Okay, we're hugging our trend line. We've noticed over we're starting to hug this trend line, okay? Can we break down below it? Now, that is not immediately a bearish sign, okay? You'd really want to see this get below 417, which is kind of the previous low, but I really have marked out here about 405. I'd want to see it get below this cluster of lows to really confirm, yeah, this thing is completely broken down, because we could come down to these lows and then just continue on an uptrend. That's possible. We could come down to this low here at 417 and continue this uptrend. So we'll see what happens with the SPY. But in my opinion, heading into next week, kind of at a critical level, because it's, in my opinion, it's either wanting to go higher up into the 430 range, which would just be a continuation of this long-term uptrend we've been in since basically November, or will it break down here? Will we sideways consolidate? Will the trend completely break down? I don't expect to get answers to that. The only answer I think you could get next week is if the thing just keeps going higher. It goes up another 3-4% next week. That it basically confirms that this uptrend is intact, at least for another week, another 2 weeks. Now, if you break down below, we have a negative week. Does it necessarily mean that this trend is not intact? But it would make us monitor this situation very closely. Now, the QQQ, not as steep an uptrend, but if you want to go back to the March lows, it's basically the uptrend has just gotten less steep. Okay, it was an uptrend since the March lows, kind of sold off, went sideways a little bit, and now we're back in an uptrend. Now, we have not peaked up above the highs on this one, but it is there. And if you follow our Friday show where we talk about all the FANG stocks, Facebook, Microsoft, Tesla, all those stocks, that some of those stocks are very close to breaking out. Okay. Amazon and Apple are in a range, but they're trending towards the top of their range. Facebook and Microsoft are really very close, if not at all-time highs. And so you're looking for them to push above those and break out. Google has just been on a straight line upwards. And so we'll see what happens with the NASDAQ heading into next week. But we are well above our trend line here. You have a pullback in this index. I wouldn't necessarily be concerned at all. We'll see what happens. And then, like I talked about, we've got earnings coming up. Not immediately for a lot of these stocks, but I'll talk about that in a minute. Now, next week, you do have Adobe, which it tends to be, at least on our channel, kind of the last of the big stocks that we cover in terms of earnings. So Adobe's on 6/17. That's about 5 days from the recording of this video. After that, you have basically the start of a new earnings season. So you have Nike unofficially, again, and this is in my own mind, considering I do videos on all these stocks, but unofficially, in my own mind, earnings season kind of kicks off now with Nike on 6/24. You got Plug Power on 6/25, which will be interesting as well. And then July is the official kickoff of earnings season, and it often always kicks off with the bank stocks. Okay, you got JP Morgan, Wells Fargo, and Bank of America, all during that, it looks like the second week of July. Then you got Netflix, so you got a FANG name posting very early. You got Verizon, Tesla, Microsoft, Intel, AT&T, all in those first 2 to 3 weeks of July. After that, you'll have the other FANG names, Apple, Amazon, Facebook, everybody else, towards the end of July. So next month is a big month, and you might be wondering, what's the catalyst to push NASDAQ, QQQ, the FANG names? What's the catalyst to push them up and above over where we're at? We're basically at all-time highs on a lot of these indexes. Well, it could be next month for earnings. So it could be that we're in a holding pattern. Two things happen before earnings. Typically, this is what I've seen, just following earnings very closely. You get a run up in anticipation to earnings. So it wouldn't surprise me. We actually saw that last month with Facebook. Facebook just ran up, okay, ahead of earnings. In fact, I'll bring up Facebook right now for you guys. So Facebook, right before its earnings, like right in here, it just ran, okay? And then it reported earnings, and it's just kind of continued the move up. And here I showed you that Facebook's basically at all-time highs right now, and you're looking for this kind of resumption of it moving higher, or maybe possibly getting rejected here and moving lower. So two things can happen over the next, we got about 30 days until a little more than 30 days before we see major stock earnings, okay? Typically, you see a run up like you see with Facebook and some other names, and they kind of run up anticipation of a good number, and then the good number comes out, and then you kind of either get sideways consolidation or maybe sometimes a gap down or a sell-off on that news, or you just get sideways movement, okay, as people kind of anticipate, I don't know what the number is going to be. I don't necessarily want to be a buyer. I don't necessarily want to be a seller. So you get a little bit of sideways move. So rarely, and I'm going to categorize this as something that's a hard fact, but I don't often see names have rapid sell-offs, okay, heading into earnings. Why, if Facebook or Apple or Tesla are going to report earnings in 30 days, why would you be in a hurry to sell off the stock unless you really had a clear indication that those numbers were going to be a disaster, which I don't think a lot of investors are predicting at the current time. So that's our earnings calendar. Now, our economic calendar, I'm going to bring this over here. This is next week for our economic calendar. On Tuesday, not a lot going on Monday, but Tuesday you get retail sales number. So that'll be interesting. We'll get an idea like how are retail sales going? Because if there's inflation, okay, people should be out there spending money, okay? Inflation is not just rising prices, okay? Just because you have gas prices up, just because you have airline prices up, just because you have home prices up, you have to have people follow through and actually pay those prices, for there to be actual inflation, okay? Anybody can charge whatever they want. I can have a piece of dust around here and say, this is $1 million. It's like an NFT or something. $1 million for this. But if nobody pays for that, well, guess what? Then my price is just inflated and it doesn't mean anything. People have to actually pay that. So retail sales number on Tuesday, we'll actually see, are people actually paying these higher prices? Then you got PPI, which I think is the Producer's Price Index. This is actually a very good indicator of inflation because it is showing you that producers are able to pass those prices on down the supply chain, okay? You gotta have inflation all across the supply chain, okay, for there to be actual inflation. Otherwise, it will be viewed as something that is temporary. You got building permits on Wednesday. We'll see, how things are going there. You got crude oil inventories that could, cause oil to go up or down. We'll see what happens there. You've got this FOMC meeting on Wednesday. And so there's going to be a lot of attention on that. We'll see what Jerome Powell says, see if there's any update in terms of how he's thinking about inflation and thinking about interest rates, because if there is real inflation, okay, the Federal Reserve, I wouldn't say it's maybe their number one tool, but their primary tool to fight that would be to raise interest rates, which in my opinion would be a complete disaster. You have an economy on the recovery. Raising rates wouldn't necessarily be the best idea. And also that could cause the economy and certainly the stock market also to go down. So we'll see what happens there. You got initial jobless claims on Thursday. Again, a lot of what the Fed is going to talk about is this job market just has not completely recovered yet. Okay. And you got Philadelphia Fed Manufacturing Index. So you've got some inflation stuff coming on this week that'll give you an idea how the Federal Reserve is thinking about inflation. And the last time they spoke, they basically indicated that this inflation is overblown and it's temporary. And I want to give you, I have this formatted to a different size screen. I want to bring up a couple graphics here. So I'm going to talk about inflation here just really briefly, talk about it kind of from a macro sense. And so what I want to talk about is inflation, are the inflation expectations kind of overblown? I'm going to come back to that one. First thing I want to show you here is this. University of Michigan just came out with a lot of really good data over the last week. And this is inflation expectations. This is essentially everybody's expectation of inflation. I want to show you back here. I talked about, I think at the beginning of the show, how back in 2000, right after the financial crisis, okay, we had a big injection of liquidity from the Federal Reserve, spending by the federal government, and you couldn't turn on CNBC. Some of you might be newer investors or younger investors, and you don't necessarily remember this. I remember this very, very well. Okay, right after the financial crisis, people were saying, oh, we're going to have hyperinflation. Okay, we had all this spending. Look at where 1 year inflation expectations spiked to. This is back in 2010 and 2011. Guess what? We didn't have any inflation, okay, since then. And again, inflation by the definition of maybe the Federal Reserve or some of these price statistics, certainly if you look at home prices, certainly if you look at certain parts of the markets, you certainly saw inflation. But from a government perspective, you didn't really see a lot of inflation over the last decade or so when the expectation was really, really high. Now take a look. Here we are on the right-hand side, 2021 over here. This is, again, we have a spike in 1 year inflation expectation, even the 5 to 10 year inflation expectation that has gone up over the last year or so, probably primarily due to the spending that the federal government's not only here in the United States, but really around the world is doing. And so you've seen this spike again. And so what could history repeat? That our expectations are overblown and that we've kind of got out ahead of ourselves, and maybe the Federal Reserve is right and that this inflation is going to be temporary and it'll come back down to a more normalized rate. So I just wanted to show you that our expectation has spiked and it has come down over the last time they surveyed this data, not only on a 1 year, but you see this blue line, the 5 to 10 year inflation expectation also came down and it's kind of in a more normal range. And so if this 1 year inflation expectation continues to come down, that'll be interesting. Now, the other thing I wanted to show you here is this is home buyer sentiment and home builder sentiment. So they're two different, basically two different graphs. So the green line is home builders. These are people that want to build homes and sell them to you. And the red are buyers, families, people, maybe even investors that want to buy houses. Okay. Notice back when home prices crashed, okay, late 08, 09 into 010, even 11, 12, 13, really saw low home prices. Home builders were not interested in selling houses at that time. Okay. But look, home buyers were actually very intelligently wanting to buy houses. Now that has trailed off, and take a look at this. Look, this graph goes back to 1985. I was barely I wasn't even in kindergarten in 1985. Okay. We have not seen home buyer sentiment this low. And just anecdotally, I have friends that are in the home buying market. Thank God I'm not. Okay. At least from a primary home perspective. Look, it's a disaster out there. There's not a lot of supply out there, so I can understand why home buyer sentiment is very low. And also, let's say I wanted to sell my house. I bought my house several years ago. I could sell it, pocket a fair amount of change, but why would I want to do that? Okay, and get myself into this market where people are outbidding themselves, and it's just a terrible market to be a buyer. So you don't see even someone like me. Maybe I needed to upgrade my house, or I don't really want to, but let's say I wanted to. I wouldn't want to do it right now. I mean, yeah, it'd be great to sell my house right now because you've seen record prices. I'd probably have multiple bids on it, but then I wouldn't be able to go out and buy anything. There's like literally nothing for sale. So at the same time, you're seeing home builders up here. Obviously, prices are high. Homes are selling at like snaps of a finger, like you don't even have to list these things, and they're selling. So obviously, home builders are super excited about it. So we have this big like delta, big discrepancy between home buyer sentiment and home builder sentiment. What is this related? So you might ask yourself, what the heck does this mean about inflation? It is showing you, to a certain degree, that maybe the Federal Reserve is correct. Okay. You have home prices that are record highs right now. Home buyers are not wanting to buy homes at these record prices. Okay. Interest rates are still really, really low, if not at some of the lowest levels you've ever seen. But home buyers are still not willing to step in and pay those prices. And in some cases, they're not able to because there's just not a supply there. So if it's supply related, that is making these home buyers, kind of not have a good sentiment about buying a house, well, then the price inflation that we're seeing could be maybe disguised as temporary. You also have home builders who, if they're able to get enough lumber and enough labor to build these houses, well, it should equalize this. Okay. So home builders are really excited about building homes. People are not excited about buying. Well, at some point, the two might start to level off. But what this is showing me that home buyers they're not wanting to pay these high prices. Okay. Because look, if home, just not that long ago, home prices have been high and they've been going higher for almost a decade now here in the United States and almost every area of the country. And people were excited about buying these homes. Now, all of a sudden, they're not excited about it, okay? And so it's showing you that the price might have just gotten too high. And so we'll see what happens there. Now, the other thing that we've talked about here on the show is lumber prices. So you got these lumber prices fell 18% this week. Lumber futures fell 18%, but analysts still see long-term strength. We'll see what happens. I don't necessarily take everything that analysts say. Take it with all a grain of salt. Lumber basically, has fallen 18% this week. It's well off the highs. People are assuming that it might stabilize, but could it be that all this supply chain issues with lumber was basically temporary, and the increase in price in lumber was temporary? We'll see next week and in the coming weeks the price of lumber. Will it stabilize or will it keep coming down? That will be a sign that these inflation related issues that a lot of people are talking about are temporary and likely to be resolved at some point. Now, hang with me here, because this could be the most interesting stat that we have, that inflation is simply temporary. Okay, the U.S. Fed's reverse repo volume surges to a record $500 billion. So what the heck is a reverse repo? Basically, high level is what the Fed is doing is there's banks like JP Morgan and Wells Fargo to a certain degree, but Bank of America. JP Morgan and Bank of America, a lot of you probably watching have banking with those two banks. And so what happened is the Federal Reserve, the federal government sent out tons of checks last year. Okay. Everybody got a stimulus check, or a lot of people got a stimulus check. A lot of people are getting tax returns. A lot of people are still getting unemployment benefits. There's a lot of money in the system. And then one of the reasons why I gave you a preview that JP Morgan, Wells Fargo, Bank of America, they're going to report here in about 30 days in terms of their earnings. And the last time we did videos of them on the show, what did we see when we analyze these companies? All of these companies, JP Morgan, Wells Fargo, Bank of America, Citigroup, all the major banks. These are the 2 or 3 things that we saw. Number one, that deposits were way up. Okay. People had lots of money deposited into JP Morgan, Bank of America. Okay. Lots more money. Number 2, the other more worrisome thing that we saw, people weren't borrowing money. Okay, from a personal finance perspective, people were taking on less debt and they had more savings. Personal finance, that's probably good. From an inflation perspective, economic perspective, not good. How do you have inflation? Okay, you have people spending money and borrowing money. Okay, and we're not seeing that. In fact, we're actually seeing the complete opposite when you look at JP Morgan's data, Bank of America's data as well. Okay, people are putting money in the bank. They're paying off their debts and they're not taking on more debts. Again, what do we see here with home buyers? Okay, when you buy a house, almost everybody, unless you're just mega rich, you're borrowing money to buy this house or build this house. We're seeing people not want to do that. So what's happening with this reverse repo? What happens is Bank of America, JP Morgan in particular, these two banks, so there's rules in place dating back to the last financial crisis that they can't have tons and tons of money on their balance sheet. Okay, it's part of the regulations out there that don't want these banks to get quote unquote too big to fail. Well, what happened is the United States government just gave everybody a bunch of money last year. And what did everybody do with that money? They put it in the bank, okay? And then they didn't borrow any more money. And again, I'm speaking in broad terms there. Obviously, people bought cars, people bought homes, but in relation to the amount of money that got put into the system versus taken away via loans and spending is still in the saver's favor, in the conservative financial, personal finance nature. And so people are saving more and they're borrowing less money. So what does that do to the balance sheet at JP Morgan and Bank of America? Well, it's totally blowing it up, and it's blown it up to a level to where they could get, they're quote unquote in trouble with some of these banking regulations. So what is the Fed doing? The Fed recognizes this problem. And so what they're doing is they're taking the cash off of the balance. This is why it's called like a reverse repo, is they're taking the cash from JP Morgan and Bank of America and they're trading it with, shorter term, like United States treasuries, things like that. And so there's a trade-off here. And here's the key takeaway from this, this article here. Is somebody from Dan Belton, a strategist with BMO Capital in Chicago. Here's his quote right here. The Fed has and will continue to relax any constraints to the facility, he's talking about the reverse repo, which will keep rates from moving substantially negative. Okay. So the Fed they had a record repo auction this week, $500 billion in cash. Okay, that is, I believe, a record for the facility. Okay, because the banks just have so much money and nobody's borrowing it. Nobody's borrowing it to buy a house. Nobody's borrowing it. Nobody's borrowing money, and more money just keeps coming into the bank. And so it has these banks in a tough spot. And here's this is where it has to relate to inflation. Okay. First of all, if there was inflation, people wouldn't have money in the bank. Okay. When you see inflation, what do you want to do? Okay. If you are dead certain that watch you want to buy, or that house you want to buy, or that car you want to buy, or whatever you want to buy, you're dead certain in your mind that it's going to be more expensive 3 months, 6 months, 12 months, 24 months from now. What would you do right now? you'd go out and buy it right now. Even for any number of reasons, you'd go out and buy that right now. Now, we're not seeing that. We're not seeing people borrow money. We're not seeing people take on these types of things. Now, this quote says that they have to do this. The Fed has to do this to keep rates from moving negative. Okay? In inflationary times, which way do rates go? Rates go up. Rates go up, and they go up not necessarily quickly, but rates go up because there is strong demand for money. Okay, when there is strong demand for money, banks can charge more for that money, but we are not seeing strong demand for money. And in fact, the Federal Reserve is having to step in there so rates don't go negative. And so in my opinion, right now, at least where we sit today, I am in the camp that, because I saw this before. Okay, I've seen this happen before. CNBC, all the economists out there, or not all the economists, there's lots of economists out there with a big microphone, and I enjoy listening to these people. I'm not saying that they're wrong. I'm just saying that their expectations could be overblown, and it could be easily solved through a number of things. We're also not seeing, the data is not backing up that we're seeing all this inflation out there. Okay, if we saw a lot of inflation, yes, prices going up are one thing. Lumber prices spiking in a week, Bitcoin prices spiking, GameStop stock price increasing. That's not inflation. That's just prices going up, right? Okay. What we need to see for there to be true inflation is people willing to borrow more money, take money out, spend money as quickly as they possibly can. That's when you see inflation. Okay. When people are scared to hold a dollar bill because they know next week or next year or 2 years from now, that dollar bill is going to be worth even less. Okay. But people are actually saving their money. They're holding their money. That might be a mistake, but right now we are not seeing the impacts of it. We're seeing the impacts of inflation through price increases, but it can be explained as temporary, and we'll see what the Federal Reserve has to say about it later this week. Now, moving on to cryptocurrency, we got to talk about this. I had some really nice comments on our last video. We picked out some nice levels here, and you could have potentially traded this stuff, and you probably could have done pretty nicely. I actually traded a little bit of this stuff, traded a little bit of Bitcoin this last week. I also traded Dogecoin successfully. Now, before we get into this, if you are going to trade crypto, you need 3 things before you do your trade. First of all, first thing I want to say is I have 2 accounts that I have crypto in. I wouldn't say I'm a holder or whatever, but I have accounts where I've had cryptocurrency for a long time. I am holding it. I don't care what the price is. It's a part of an asset class that I have a little bit of exposure to it, and it goes up, right? Then I have another account, which I typically use Robinhood for, where I am trading this stuff because it trades a lot on supply and demand. Okay. And as you can see, you have some big moves up and you have some big moves down. You have volatility like that. It actually makes for good trading. And so here we are with Bitcoin. It is consolidated sideways between 3,400 and up over 40,000. So you got about a $6,000 range on this one. You can make some good money. What's that, like 20%? It's not quite 20%, but boy, you can make some nice ranges. But we are seeing that this range, we're kind of in a downtrend. Okay. We're basically doing something like that. So we're in a little bit of a downtrend with a Bitcoin, but you come down here to 34,000, that could potentially be a starting point for your trade. So if you're going to trade any of this stuff, and we'll talk about meme stocks here in a second as well, you need an entry point. You need to figure out where you're going to buy this thing. You need a stop loss. Most important thing, where are you going to stop out on this? This is why we put these lines here. Okay. It's like, hey, I want to enter here, but I tell you what, if this trade goes against me and we start seeing big red candles show up, because you could have done the same thing up here with Bitcoin. Could have bought it at 48. You're like, hey, this thing bounced off 48, or even come down here to 45. You're like, hey, Bitcoin holds this 45 level. Well, guess what? It holds it until it doesn't. And so you would want to put a stop loss underneath that level. And so that's what I would do down here, right around that $34,000 level on Bitcoin. I'd put a stop at maybe $1,000 underneath it. I don't think you need to take a lot of risk with this stuff because it's so volatile that you have a successful trade in this one, you're going to make a lot of money. So there's no reason to get stuck on a bad trade. So I'd put $1,000 downside because you can bounce here at 34, come back up to 38, come back up over 38, 39, 40. You got 6,000 in upside and about $1,000. You take $1,000 hit on a single trade. I like that risk reward. We are in a downtrend here. The trend is down. We're sideways consolidating a little bit, but we're making high, lower high, slightly lower high, lower high. So in the shorter term, I'm still bearish on this one. I think we're still heading lower until we get a nice bounce and we reverse this trend. You're really looking for a break above. This is for people that are ultra long this stuff. You're looking for a break below above 40. We'll call that 40,700. You're looking for a solid break above that. That would put you back up into these zones. Tell you what, you break above 4. This is why I kind of like this trade setup with Bitcoin, because what I would do, I'd buy a little bit down here. I'd put a stop loss here just in case I'm wrong. You get momentum on this one. You get, I would sell it as we approach. I'd sell a portion of what I bought here at 40, at around that $40,000 range. I'd let the rest run, because if you can get above this 40,000 level, there is not a lot holding this back to get to 45,000. So you've got like 20,000 in upside. And you could potentially have 20,000 in upside and risk, about $1,000 on this one. Again, we're talking about in whole, buying whole Bitcoin. I doubt a lot of people watching this are trading this in whole figures, but any kind of fractional investment in this one or trade in this one could set up nicely. So I like Bitcoin from a trade setup. It's not quite there yet. You could potentially jump the gun here. You want to get in today. I wouldn't necessarily want to do that. But you could get in here right where we're at, 35.50. I'd put a stop loss down here at 3,400. I'd want to come under this trend line, okay? And I might not have this trend line in drawn perfectly. You could come in here and adjust these how you want to. I just have these on here for illustrative purposes, that you got to pick a spot to get in. You got to pick a spot to get out in terms of stop loss, but then also your exit strategy as well. Because the big mistake I see a lot of novice traders is you start seeing these big green candles and everybody starts talking about how Bitcoin's going to the moon. It's going to 100,000. It's going to 1 million. And then all of a sudden you're holding it and you're thinking you're a genius. And then these big red candles show up and all of a sudden you're back to break even. Okay. You got to pick levels to get out and cash out, at least a portion of it. Okay. You put $2,000 into this, say, okay, when it gets to 40,000, I'm going to peel off half of it, or 20% or 45% or 75% of it. And then I'm going to let the rest run. Then I'm going to put in another stop loss. Okay. Now you got your remaining 30% of your investment. You're going to put another stop loss on it. And then you're going to let the rest run. That's how I think about when I do these trades. Now, I was successful with Dogecoin this week. Not last week. I was actually at the US Women's Open last week. And so we didn't have a video last week. But 2 weeks ago, Dogecoin was right here, sitting right at about 30 cents. And I talked about how I liked it at 30 cents and you could play it up over anywhere up over 36, 37 cents. Okay. And I know we're talking about 30 cents here, but from 30 cents to 36 cents, that is like I think that's about a 20% move. Guys, you make 20% in a couple days. Anybody out there would take that. Okay, we're sitting right there again with a Dogecoin. Okay, we're sitting right here at 30 cents. Now, I wouldn't be as confident, and we're sitting here at 30 cents, so I'd be very careful. Again, I want to stress this when I'm talking about trades and you're getting here at 30 cents, 31 cents at Dogecoin, you need to put a stop loss on this one, okay? Because if this thing breaks 30 cents and it breaks it, now we've seen it. Look at these wicks, okay? It is wicked down below 25 cents, okay? And it's wicked as low as 20 cents, okay? We're talking about like 2 months ago, 3 months ago on this thing. So I'd put a stop loss right around 28 cents, maybe 27 cents. Okay, I'd have 3 cents in downside. So I'd buy it at 30, have 3 cents in downside, and I would play this back up to 35 cents, 36 cents. Okay, and I'd peel off a large percentage of my trade at 35, 36 cents, let the rest run maybe up into the 40-cent range. I'd peel off, maybe set a trailing stop. Right here, we're seeing candles on this left-hand side, right in that 40-cent range. I almost said stock, but the crypto likes to trade off here. Same thing here. We topped out right at that 40 cents range. It just looks like to me sellers step in at 40 cents, but they come in here at buy at 30 cents. So I think you could play that bounce there with Dogecoin. Now with Ethereum, I don't got as clear a picture on this one. Okay. Yes, we are in a very short-term downtrend. Okay. You see here, we are making lower high, lower high, lower high. This thing is coming down to this range, and this line is not drawn in great, maybe down here. I actually think this 2100, we'll just call it 2100, round this number up. 2100, if you see Ethereum come down there, that can be a buy the dip opportunity for maybe a longer term position, because you saw here, we kind of bounced. Now we wicked way through it, but right in here at 2100, you saw some buyers over here. You saw some buyers as well, as found some support here at 2100. 2100 looks like to me, Ethereum likes some stability there. I think you could come in here at 2100, set a stop loss at maybe 1950, 1900 or so, $100 in downside. And you have upside, again, probably 30, 40% in this one. Okay. And so that's why I like these cryptos. I think you can trade these, but again, you got to set an entry point, a stop loss, most importantly, and an exit. I think even more importantly, that is an exit. Okay. You got to learn how to get it, because look at Ethereum. It went from 2,200 up to 4,200. And I guarantee you all along here, everybody's thinking this thing's just going to keep going up. Everything on CNBC is telling you it's going to go up. All the influencers and the Twitter guys are saying it's going to the moon, guys. This is it. And then all of a sudden it gives it all back and more. Okay. So if you want to profit, again, if you're buying and holding, I think it's worth having a little bit of this stuff that you hold. But if you want to trade this stuff, boy, the volatility doesn't get much better than this. Now, speaking of volatility, what could maybe get better than this in the stock market? These meme stocks. So let's kick things off with GameStop from a technical perspective. This one has broken trend. Okay, we did the same thing. We had this first parabolic move with GameStop. I traded along here. I bought it somewhere. I can't remember where I bought it. I made like $100 or something. It wasn't a lot. I just wanted to do it to say that, yeah, I traded GameStop. I thought it was going to be temporary. Came all the way back down. I mean, we went up to like $400 plus on this one, came all the way down to 40. I think a lot of people thought, well, it's over, right? Well, no, we got back on the train, went all the way back up to 340. And then it broke trend. Okay. And when this thing breaks trend, okay, this thing gets on an elevator and then somebody cuts the cord or whatever, an elevator. I don't know how elevators work, but someone cut the little steel rod up above and boom, you came all the way down. Now you didn't come all the way down to 40 on this one, but you came all the way down to about $100, $120. And then we consolidated and then boom, we're back on that ride all the way up to 340. And now we've come back down. So what I'm looking for with GameStop is maybe you pause here at 220. That's possible. 220 would be an interesting spot, but we could come all the way back down to 140. I think that's $100 from where the stock is right now. I know that's crazy. And look, from a fundamental perspective, none of these make any sense, even for crypto. None of it makes any sense. But if you want to trade this stuff, I got absolutely no problem with it, as long as you hit our 3 rules: entry price, stop loss, exit price. Okay. So if GameStop were to pull down to 140, I could see that's a spot. Okay. That's where we bottom this first leg down. It's where we found a lot of support down here at 140. That could be a spot where you could get in on this one, because boy, you bounce here at 140, just like we did here. This was like last month, 2 months ago. You went from 140 to 340 on this one, like in a month. Okay. And so boy, you could have some explosive moves. If you got in here at 140, I'd have a stop loss really tight underneath that, probably 120. I wouldn't want to break below these lows right here, okay? You break below these lows, and look, $40 is in play, okay? So this thing could really crash down very, very, very hard. We got this big gap over here. Wouldn't surprise me if we fill this all the way back to 140. I'd put a stop loss at 120, because look, you have $20 in downside on that, and you got $100, maybe even infinity upside to that. I'm joking when I say infinity, but that's what we got. Now, this next stock is called GEO, the GEO group. This one fits the bill. I've seen this on some of the tickers out there. This is picked up by some of the meme names. You got 36% short interest on this one. Okay. And what I noticed about this one is we were in a big channel down on this one. Now, from a fundamental perspective, I bet if I looked at this company's balance sheet, their financials, it'd be an absolute complete disaster. Okay, so I'm not, I want to stress, I am not recommending any of these names other than a trade. Okay, and again, if you do a trade, you need to do the 3 things that we've talked about over and over here on the video. You can't just buy these on a whim and say, I'm just going to watch it go up. It just doesn't work that way. Okay, I just showed you the Gamestop chart. It goes up and it goes down. Okay, same thing's going to happen with a stock like this. But what I did like is technically we were in this big downward channel and then we broke out above it. Now we broke out above it in a big way. Okay, all the way gapped, like it candled all the way up here to 11 and then came back down, which is not a big deal. Okay, it's not that big of a deal. Okay, what I think is we're sitting here right where my cursor is, right about $7.40 on this one. I think you could come back down here to $6.55. I think we could fill this gap perfectly. Come down here to about $6.50. That could be a spot where we've still kind of broken up above this trend. This shorter term uptrend would still be intact. Okay. You're still in this shorter term uptrend, even if we come down here, but you got to stop right here at 650. Okay. That's where it's got to stop, because if we break below 650, particularly maybe $6 per share, this thing is completely broken down. This was basically just kind of a 1-day wonder, 2-day wonder type trade, and it's over. So if I bought into this one, I'd want to get in right in that 650 range. I'd put a $6 stop loss. I'd be risking about 50 cents a share on this one. And look, the upside is back up to $8. Even higher than that. I'd probably start peeling off at around $8, which is right about where this one started to want to stall out a little bit. That's $2 in upside right there. And then I'd peel off a little bit of my position there, because look, this thing could rally. It could get all the way back up to $11, $12, $13, $14. From a technical perspective, it doesn't look too bad. Now, the last meme stock is this Wish stock. I don't think this is wish.com. I think this is something else, but I'm not exactly sure. Again, from a fundamental perspective, I don't really care when it comes to these meme stocks. Now, what I noticed here, similar to Geo, we were in a big, long downtrend with this one, and then we popped out, okay? We popped out, got up to 15, and now we're back to 10. 10 is actually a spot I really like. Okay, this is one on Monday, if it hasn't taken off, and I like these big volume candles, okay? So I like it here at 10, okay? I like it here at 10. I'd set a stop loss, 50 cents, 75 cents underneath it, whatever. I'd be just looking with these trades that are really gambles. Okay. Just realize there is no harm in taking a shot and losing. Okay. If you come in here at 10 and you're like, I'm getting out at 9:30 and you get stopped out of this one, don't worry about it. Okay. You took your shot. It didn't work, because if you're right, okay, if you are right and you buy here at 10 and we get a bounce, boy, you come in all the way, you could come easily all the way up here back to $14. Okay, we had a big old candle up here to 14. Okay, so we could retest that level. So you got $4, almost $5 in upside, and you're risking about 30 cents on this one. I like those types of risk rewards. When I do trades, I like big reward and taking a little bit of risk. Because again, there's other traders out there that like totally the opposite, that like to just hit base hit. They like to be that singles hitter in baseball. They just like to be very conservative, and they like to churn off 2%, 3% growth on their trading portfolio. And if that's you, by all means, go ahead. Me personally, I like to take a little bit big. I like bigger upside trades, but I'm still very conservative setting my stop loss. Okay. Because when you have high volatility assets like crypto and these meme stocks, you need to have those stop loss set in, because these things can turn against you. Again, as we looked at GameStop, this thing was to the moon, back again, got back on a rocket ship, came back down, got back on a rocket ship, ran out of gas and came back down. I like that though. I think you can make a good amount of money on that. So hopefully you guys enjoyed. This was the weekend stock show. Hopefully you guys enjoyed this one. If you've hung around this long, hit that like button for me. I appreciate that. Thanks for tuning in. We'll see you again next week. Good luck with your investments.